Welcome to Own Smarter with Todd Baker, where we help you protect, manage, and grow your wealth through homeownership. If you're like many homeowners, when you purchased your house, you thought you had a fixed payment, only to discover later on that in fact the payment could fluctuate. In this video, I'm going to show you 4 ways that can happen and what you can do rather than simply just accepting the change. Let's start by taking a look at what's happening to insurance. So in the state of Texas, homeowner insurance has got up 79% since 2019. In 2019, the average was $19.61, and you can see it slowly rise to the current average of $35.16. That represents a $129 a month increase in the housing payment. Insurance payments have started to moderate a little bit, and I'm going to discuss at the end what you can do to try to get the best coverage at the lowest cost. So now I want to take a look at what actually goes in and makes up your payment. Let's take a look at that. So your payment's fixed, but your payment isn't. Or the right way to say that, your rate is fixed, but your payment is not. The principal and interest is always fixed for most people. Very few people do adjustable rate mortgages. But there are 4 other elements, 2 big ones: property taxes, homeowners insurance, and then your mortgage insurance premium if you have it, and possible HOA that can fluctuate annually based on if you have an HOA. So we touched on the home insurance. The property tax is the other thing. So here's why your payment actually jumps. Number 1, the insurance renewal increases. And I can tell you that the renewal will be sent to you about 30 to 45 days prior to the annual renewal period. So like if you bought on September 1st, next year, around August 1st, you will get a renewal notice in the mail, which I can tell you, very few people ever look at it. Or if you have an app, it comes there. People don't look at it. So the next thing you know, your insurance, I've seen people insurance double and triple, and they're shocked. Your property tax can change too. Every year in April, every county in the state of Texas sends out a notice to you of appraised value and gives you a few weeks in which to evaluate it and even dispute it. But very few people take advantage of that. And so what happens is these changes occur, there can be an escrow shortage, and then if any, and basically more than one of these can change at the same time. So this is always going to adjust, these 2 items right here, so you're always going to have a little bit of an adjustment. So the question is what changed and what can you actually control? All right, so we're going to take a look at what I call the 4-part Own Smarter payment review. So before accepting a higher payment, you need to review your complete homeowner picture. So first, insurance renewal. You compare coverage, not just the price. So let's talk about this a little bit. So everybody simply looks at what is the monthly payment. But there's more to it than that. If you have a really low monthly payment, that might seem good, but if the carrier you're with has a B rating or a low rating, you might be with a carrier that when you ever need them has a history of paying pennies on the dollar of actual claims. And at that point, you're just wasting money. Alternatively, you might be overinsured. Many insurance agents will max you out and not even explain that to you. Or you might be underinsured as well. I saw one this week where same price on 2 products, one did not have water coverage, and the average water claim in the state of Texas, when it ranged from $7,000 to $25,000 for a weather-related water claim. That's not even wind and hail. So that means that this particular person could have gone with basically, it was basically the same price, but it was easy to show them like, hey, but this has more coverage. So when it comes to insurance, you're protecting your asset. You want a great price, but you want to review and say, given all the carriers out there, who has the best price? So if you're with any of what's called the captive carriers, it could be Allstate, State Farm, USAA for the veterans. They're a big giant company now. They're a big giant company like Allstate, Farmers Insurance, all these big brands. They have one product. So it doesn't mean when you start out with them it might not be bad, but what tends to happen is they slowly grow your premiums over time because people don't pay attention. They know that the renewal rate and the capture rate on that is very high. They know they don't have to resell you or reshop you. They just expect you to renew. So you end up paying more. So the real wheelhouse is an independent brokerage that has 25 or more carriers through the wholesale channel that'll actually take the time to protect your home and get your right coverage. I have a home protection specialist that can do that for you. If you're interested, reach out. Next thing, property analysis. Confirm exemptions and values. Okay, that's a big one. If it's a primary residence, did you remember to file your homestead exemption? You get $140,000 off your ISD tax if you do that. Did you remember to do that? Okay. If you're over 65, you get that as well. The other thing is, when the notice of valuation comes out, are they assessing your house for more than it's worth? If so, if they are, you can contact your realtor, you can get some comps, you can fill out a form, and you can actually protest that. And in worst case, if they did it right, at least you'll know what your escrow can be, and you can sort of plan accordingly and not be surprised later on. So what else we got? Find the real reason for the jump. If you get a large increase, you need to request an annual escrow analysis. They're required to provide it to you once a year. Usually they do after the increase, and people don't pay attention, but you want to go through that and dissect it and see, hey, what happened here that made the increase? And you're going to know it's always going to be one of those two items that have the big increase. And then the fourth one is mortgage and equity. Review the entire equity strategy, MI removal, reserves, and better options. Okay, so if you have mortgage insurance premium, it can be removed. There are multiple ways. On a conventional loan, if you have enough equity, which is 20% or more, you can pay to have an appraisal done through your servicer. And if it shows you have 20% equity, and typically you have to have it for at least 12 months, excuse me, they will remove your MI premium. The other way, if you have FHA, it might be a lifetime MI, but if you've had the FHA loan for a while, even if the rate's lower, it might be looking at even doing a refinance to restructure the loan to see what does it do for my cash flow and what does it do for my long-term wealth. That all requires a home strategy with financial planning behind it. And it's what I do as a home strategist. So if you like, first of all, I hope you found some information in this video on how the escrow account and the monthly payment actually works, how to go about attacking it and getting it lowered. And then finally, please feel comfortable reaching out if you'd like me to look at this for you. That's what I do all day long. I help people protect, manage, and grow their wealth through homeownership. I'd like to help you do the same. Thanks so much, and you have a great day.